Look, I mean, we've talked about autonomous, deregulatory. That was the bull case, and that continues to be because autonomous is going to be the key for Tesla. But John, no one, including us, expected that Trump. When you look at Trump, Musk would essentially be living in Mar-a-Lago, living at the White House, 110% in Doge, and this has been, I think, clock struck midnight. I mean, this is now at a point where it's a tipping point where Musk needs to focus back on Tesla. And that's why I say it's a moment of truth. We've been here before, but this is, I think, tipped the scales, and we're seeing it in stock.
You're right to say we've been here before because we have, Dan. We used to talk about this with regards to SpaceX, that he was leading loads of different companies. It wasn't a problem then. Why is it a problem now? What's happening at Tesla that says to you it's missing its boss?
Well, it's because of brand. Because the last thing that you want is Tesla to become a political symbol, viewed as Doge or Trump or whatever you want to say. And that we've already seen, whether it's demonstrations and some of the concerns and some of the protests that we've seen globally. Look, that could all fade, and that's still contained at this point. It's the best car, and in terms of best car selling last year in 2024, Model Y. The issue now is they have the biggest sort of technology innovation ahead when it comes to FSD, unsupervised Austin, a new model coming out in the summer. What I ultimately believe is really the start of this whole robotics and autonomous future. But now you need Musk to lead. It's time to come home and start to focus back on Tesla. And that's been a huge issue here. Investors have given, sort of some flexibility. But now it's hit a tipping point. I think you've seen it in the stock. Frustration's building.
You said it's time to come home, Dan, and we heard from Elon Musk saying that he's going to be with the Doge effort for at least another year or about another year. Is that enough, or does that make you think that you need to downgrade your outlook?
Yeah, at least I'd be surprised if that happened. In other words, my view is that I think he's going to have to see the writing on the wall. Look, we've been here, but we've talked about this, whether it was SpaceX, whether it was Twitter. We go back to other issues, 2018, 19. I think he's going to start to get the message. Now, look, it could take some time, but I believe this is when he's going to have to start to balance his time. He could still be focused on Doge. You have to be CEO of Tesla at this point. And look, Trump buying a Tesla, I mean, it's not moving the needle. And to some extent, it actually have a negative impact relative to the political symbol. And I think that's the frustration here, when it comes to Musk and Tesla.
Dan, less than a month ago, you said the best is yet to come. You said you think it's going to be a bet for the ages in terms of Musk on Trump. When it comes to autonomous, it's worth trillions of dollars. That continues to be the golden goose, and it's what they're focused on. You thought his proximity of power was going to unleash this epic demand for Tesla. What happened?
Well, look, I mean, medium and long term, it's that. In other words, autonomous is the future. I believe the federal autonomous roadmap will be there, and that ultimately all of this would actually just be noise relative to what could happen in terms of what that means. That's worth $1 trillion to the story. And that's why I think this is probably the biggest sort of physical AI play out there. But that said, this near-term situation is unsustainable. And I think no one expected that he would dive so into the deep end of the pool when it comes to Doge. That's where he's spending all of his time, always in Mar-a-Lago, always the White House. And I can tell you from Tesla shareholders, it's at a point where white flags up. He needs to change, needs to balance. Otherwise, everything we talked about, autonomous, bet for the ages, this negative, the brand issues, that then starts to actually taint some of the long-term impact. That's our concern here, and that's why we're really communicating that to Tesla and the board.
Dan, I have to be honest, I don't think I've ever heard you this as unenthusiastic about a U.S. tech stock ever. I mean, next time we see you, you might be wearing a black suit. I'm just wondering, can you look back in your history of calls and ever felt this uncertain about a name that you were quite enthusiastic about just a couple months ago?
Oh, we did it with Tesla during the Twitter situation. We've done it with Tesla. If I go back 2018, 19, sometimes it's tough love, right? I mean, Tesla is probably one of the names we're most bullish on in all of tech. And I continue to believe, tech is way oversold. But you got to speak out, because when I talk to thousands of investors around the world, I need to communicate what I believe Musk needs to do now for that long-term story to play out. And that's what needs to happen. Silence just can't happen. You can't be glass half full, given the situation, what's happening here with Doge and some of the brand issue and the worry about distractions and where he needs to be focused on his efforts.
Dan, to Lisa's point, you don't sound like a man with a 550 price target on a stock that trades at 230. So Dan, what gets us to 550?
You get through this period, he starts to get more dialed in Tesla, and then John, we're sitting there in the summer, that sort of golden case is there in terms of autonomous, FSD, unsupervised, and the long-term story. You got to get through this near-term turbulence to get to the gold at the end of the rainbow. Now's the time. It's a moment of truth. Musk needs to step up.
Just to understand your framework, if we get to the summer and nothing's changed, does your view change?
Look, if nothing changes from this on, then obviously brand issues would be a lot bigger, and that's something that could start to taint the story. I believe the longer term story continues to be this is going to be a $2-3 trillion market cap. But he needs to get through this period because this is not serving anyone well. And I think that's really the message from Tesla shareholders.
Let's come to that last point, though, on stocks that are either cheap or cheaper. Ginny, I think cheaper is the best you can do if you're talking about Tesla, where you've got Dan Ives pounding the table again on how this is a great opportunity. But to Kev's statement, I don't know if I'd call it cheap, but it's definitely gotten cheaper.
It's gotten cheaper. I mean, adjusted earnings expected to grow at 24% annually through 2026.
Makes it admittedly good.
No, I mean, it's admittedly good, but it makes its current valuation of 99 times its adjusted earnings look expensive. I mean, you could look at pretty much any major tech name right now and say historically it's trading at a cheaper multiple, but I mean, I guess Tesla has carried such a high valuation for so long. This has always been.
Yeah, it's been 200 plus for a while.
Yeah, this has always been the argument of the bears versus the bulls. I will say, so Tesla this week has been, I mean, notably, I think, a weak spot, obviously Apple as well, but we know that the rest of the Mag 7 were known for more of their stability. Tesla, though, many are arguing it belongs somewhere else. I mean, shares have traded between 139 to now 489 over the past 12 months, a range of around $350, which is now about 150% of their share price. So that ratio is far less than 50% for the rest of the Mag 6, as some would call it. So that does say it's more volatile. I think that's actually why it's such a highly traded stock, though. So, I think that you could make the argument both ways. And I guess the high valuation argument is that it's always been perceived by the bullish camp as a tech and an AI and really a technology growth story, not so much a auto. But the news we got today wasn't exactly positive either. Wells did trim its price target modestly, though, but 130 down from 135. So that's, pretty underwhelming, keeping an underweight rating, saying their shocking year-to-date sales now in Europe for Tesla have finally shifted the focus back to the company's deteriorating fundamentals. And they pointed out that sales are tracking down about 16% year to date. European Union sales down about 45% in January. Specifically in Europe, though, Germany was the concerning market, which was down, I believe, just shy of 60% annually. But mind you, also, Germany makes up less than 3% of Tesla's overall sales. So okay. I also think the same could be said for the EU sales. Yes, they were staggering and they were negative, but it's such a small portion of its business. You have to consider how Tesla makes its money. Okay.
Good job weaving that into the kind of short case here for Tesla, because I got confused. I was thinking, didn't Dan Ives had a positive note yesterday on Tesla, or was it the day before?
He did, where he basically said that
Did he say $500?
Yeah, $550, I think is his price.
Okay, so I'm not imagining that, right?
No, and he has the note on Apple today.
He's got a note on Apple this morning. Okay, well, cutting the price at Wells Fargo, the bears, get out of here, Wells Fargo. We don't want to hear. No, I'm just kidding. All right, thanks for the balance. Tell me about what he's saying for Apple, though, because I know he was saying $550 on Tesla. And what's he saying on Apple? Because, the market needs a cheerleader right now, and that's what he does.
So he said in a worst-case scenario for these AI delays for Apple to take around 10 million iPhone units, or about 4% out now of their fiscal 2026 and 2025 years. But they still expect Apple to sell roughly 225 to 230 million iPhones now in fiscal 2025. They still actually see some major upward growth trends towards around 245 million to 250 million by 2026. So they have a $325 price target, also pretty high here. Apple, the worst performer of our Mag 7, at least as of Thursday's close. So Yeah, you could say that Dan Ives is a cheerleader for both of these names. He did have a more, I'd say, frustrated tone on Tesla earlier this week, but
sure.
Still sees this as an opportunity for Apple. I think the story with Apple here, to characterize some of the recent pressure, is Siri delays. I mean, you have like a major portion of your Apple Intelligence now being delayed until 2026.
I got another way I'll put it, though. Piggy bank. Apple is basically people's piggy bank. A lot of investors and big money portfolio managers that have to own stocks and can't own a certain degree of cash or bonds. They use Apple basically to stabilize the portfolio. So the case that was made to us from Zed earlier this week is when the market got slammed. People went to the piggy bank and sold Apple. And interestingly enough, if we bounce today, Apple's selling was one of the early signs, actually, the market was starting to stabilize, which is what we did argue here. So we'll see.
And we were arguing that maybe this was a necessary move.
Yeah, and overdue, too.
Overdue.
Yeah.
I think there were so many words being thrown around like super cycle, which I know Dan Ives has also said of Apple. And hey, I'm not rooting against that narrative because, again, this name is so exposed to the overall market, so exposed to all of our portfolios. I don't think anyone's rooting against Apple, but I think that when you don't have numbers to match this enthusiasm and euphoria, and you're seeing this name somehow able to skate by on the deep sell-off, to completely unscathed, you'd say, wait a second here, like, where do they fit in this narrative, and how are they still able to grow just, beyond every other company, the way the market was pricing it?
I get it. It's just the market still, I totally get the case for, their kind of struggles in AI and this cycle of the phone. But the market just sees it as a huge network of people who are not going to leave, and Apple can reap those rewards. But finally, $210. Apple's probably got to, I don't think it can sell off like it's been and we have a big rally. I just don't think that's possible. Every other 6 of the 7 could rally big to offset it, but I think today Apple's got to play ball if you want to get a real rally. Like, this has got to stop this straight down.
I completely agree, and I was making that argument yesterday to some of the pessimism from the sell side of, hey, you really can't believe in this market recovering if you don't believe in Apple recovering, because they've gone even more hand in hand in the last even several weeks than they have in some time. But facing for its worst week now in 5 years, which tells you how much of a move. I think a great point, though, where we're just not seeing